Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Petersen.
All right, we are back with another episode of the Real Estate Investing Club. I hope you guys are having a great day, great week, wherever you are and whatever day it is for you. This is going to be a good episode for you guys. First of all, it's Friday, so we're bringing that good Friday energy to you. It's sunny here in Seattle. Anytime it's sunny in Seattle, you know, the whole world is happy when it's sunny in Seattle because we don't get enough of it. And so we bring that energy level up. And we got Mark AINLEY with us on the podcast from GC Realty and Development out there in Chicago. He's also the host of Straight Up Chicago Investor. So it's going to be a good episode. They are into single family, industrial, and property management. So Mark, thanks for hopping on.
Gabe, it's an honor, man. I appreciate you connecting here.
Absolutely. I told you before we got on here, we always like to start with stories. We like to hear how people got to where they are. So why don't you take us to the beginning of your story in real estate and tell us how you got here?
Yeah, growing up, so I'm 45 now. So growing up in the 90s of like when you start thinking about what you want to do, I went through the cop, the fireman, ultimately landed on stockbroker, but for all the wrong reasons. You know, the glory of Wall Street and money and nothing I had any clue outside of Hollywood. But, E-Trade came, online trading, all came on. A couple of stockbrokers like this industry is dying. And I kind of shifted over to real estate. And I thought I'd buy, I'm like, all right, I'll be that landlord that was 100 units. And ultimately, in hindsight now, looking back a couple of decades, it was all about more the action than it was even money. Because even today, money is not what drives me. It's about like the action and between property management, doing a deal dying, something going wrong and having to save the day. Like, those are all things that really kind of keep me going.
You're a deal junkie. I like that.
Yeah. So and think about this, property manager, right? No one ever calls us up to tell us we're doing a good job. It's always, I got this problem, I got that problem, this fire happened. So, so got into real estate, bought my first investment property, really screwed it up. Ultimately said, I'm never going to be in property. I'm never going to own property. I'll just be a broker. I got my license. It was really easy. 2005, 6, 7, you could sell anything to anybody. So I was making tons of money on the broker side, but those people I was selling all investment properties and they kept coming to me saying, Mark, will you manage it? Will you manage it? And I fought it off. And then ultimately, my attorney said to me, he's like, hey man, I'm going to pay you to manage this. I'm like, well, Paul, like the only 10 I ever had, I evicted and you helped me do it. When I screwed up that first deal. And, he's like, you learned all your lessons. And I'm like, I started doing the math in my head. I'm like, all right, if he pays me $50 a month, that covers, I get a water cooler for the office for this brokerage company that we're growing. And then 2 days later, someone that we mutually knew is like, man, you took Paul's property. You said you kept telling me no. So there was 2 more. I'm like, all right, well, their $100 will cover the electric bill. So property management started off as a means to an end. And then the market crashed and we did tons of investing, really Class D stuff. We did about 482 Burr properties. But along that time, the property management just kept growing. And it was always in the background. It was more, I liked kind of the reoccurring mindset around the cash flow for the property management, but it was never the business. It was always, hey, we do this, and we do property management. And it wasn't until about 14 when we shifted to, we're a property manager. Like we had 400 or 500 units and we didn't have a process in place. Right? We kind of have a whole company running here that's really running by
what's this going on in the background? It's a whole property management company.
Yeah, so we got really serious in 14 and we've been really serious on the property management side. And now, I mean, we do the investing side and we talk more about that. But I got into real estate and, it was going through the recession, all that stuff. There's different survival techniques to make money and those were all interesting. But it's been awesome. Basically just a little over 2 decades now.
Nice, man. And yeah, property management is one of those things. Once you get into, especially on the single family side, once people start buying single family properties, they get to a point where they think maybe I should start a property management company. I have these properties. My property managers that I'm hiring are doing a shit job. I could do a better job than them. And so they think that they're going to start their property management company. Not a lot of people make that jump. Do you suggest people who have maybe, let's say 10 doors, they have 10 of their own properties, and they've considered opening their own, hanging their shingle as a property manager. Would you suggest they do that, or what are the downsides that people don't see about running a property management company?
It was funny. You're so right there of how people get into property management. And I heard a stat not too long ago. It was like 60% of property managers were started because they were mad at some other property manager that they thought they could do a better job. And I think, so property management for us, I always tell people, like, through the podcast, and they talk a lot of early investors. It's like, manage your own stuff. If you have learn how to do it, when you hire a property manager, you know what they're doing right, what they're doing wrong, all that. And it really comes down to an opportunity cost for property management. I always tell people, we really have our property manager offers really two services. One, you lower your risk, like Washington, Chicago is very heavily regulated. And, we have all these different municipalities, counties, Chicago, like all these different rules you have to know. So there's a lot of risk, right? One stupid risk you're in, or one stupid mistake, you're in court for 2 times security deposit plus attorney fees. And that's a big problem. And so risk is one, and then buying your time back. The whole idea, if it costs you $150 and maybe it costs you a little more for maintenance, to get it done, but you're able to take that 20 hours a year or times 5 properties, 100 hours a year, and go find a couple more investments, or maybe you're growing your own business. A lot of times property management is necessary, which is when it comes along the lines of opportunity cost for somebody.
Yeah. And I have heard on the benefit side, I don't run a property management company, but I've heard that when you do, you tend to get good deals that come your way from investors that you manage their properties. And so they have these properties, they're managing them, and they're just like, you know what, I'm done. And they tend to come to you first, even before they come to brokers. Is that pretty accurate?
Yeah. So that's really how we got kicked off in industrial. So we do manage about 500,000 square feet of commercial space early on. And again, that was a fake it till you make it. But commercial property management is so much easier. It's I always say it's Monday through Friday and no domestic violence. But you have...
so you weren't just... Okay, sorry. I didn't even realize that. You weren't just managing single family. You were also on the
so apartment, industrial side. Okay. So, but some of those owners we took on, they maybe built the building back in the 70s or 80s, and there's 3 or 4 buddies that, one was a construction guy, one was the broker, one was the tax guy. And they got together, and as they got older, usually, you and me, we might hand off a property to our kids or something like that someday. They couldn't do that. And their kids were all in their 70s, their 60s and 70s. So they're like, we're just going to sell these. And obviously we were first in line. And that's really how we got the jump into industrial, kind of good timing. Obviously we built that rapport and we got our first couple of buildings that way. So that was pretty exciting. And then the last kind of decade here, and it's been something across the country, but here in Chicago especially, there's been a push for industrial. And we invest in the older industrial, not the beautiful 20-foot clear, 100, 200
space. You got the beautiful retail.
Yeah. So we love these 60 buildings built in the 60s or 70s, some 80s, 12-foot clear. If we're lucky, we get 14-foot clear. But the thing is, here with regulations and fire codes and setbacks and zoning, we buy them for $90 to $100 a square foot. We can't build these buildings anymore for less than $250 a square foot based on that. So, and they're tearing a lot of them down to build the bigger buildings in these in the industrial zoning. So, we definitely see a supply thing that will always drive that being a good investment for us.
Hey guys, quick break from the show. If you've listened to this podcast before, you know we are always talking about how important it is to have the right mentors and partners in real estate, which is exactly why I've opened up the Real Estate Investing Club online community. It's a place for active investors to learn, collaborate, and get real deals done together. And right now, it is 100% free to join. We host weekly calls where we review deals, talk strategy, and share tactics. Just click the link in the description below and come join us. Yeah, and Chicago especially is such a. You guys have so much industrial out there, so it's a really good place to do that. Let's pivot. Let's talk a little bit about industrial. That is an asset class that is, a lot of people really like it. First of all, it had that hockey stick moment where just everything kind of went up to the sky in the past couple of years, and then also it's triple net, which is a great. The best way to run real estate is triple net. So tell us about industrial. What do you like about it? Where do you find it? Just go through kind of your your whole strategy behind industrial.
Yeah, when I got into it, when we started managing these properties, called around the time of the Great Recession, they weren't as attractive because it was about 15-17% vacancy at that point, and now it's like 3 or 4 here in the Chicago market. But the whole online distribution centers, data centers, all that stuff is just taking up so much space. Where
data centers. Oh, because industrials are being torn down and turned into.
So they're putting them in. It usually falls in the same zoning. So, and they're huge, right? Yeah. So they usually takes up 10 or 12 of the buildings that we might invest in that they might have torn down. But that's gone downhill. So a lot of stuff we do, I listen, I love triple net. We have a couple investments that are triple net, but a lot of these tenants that we have in these, call it 3,000 to 6,000 square feet, are more smaller sign guys, plumbers, stuff like that. And they, as much as we love to try pushing triple net on them, they do like the predictability of what the rent is. So a lot of times what we do with them is we'll do a modified gross. And basically what that is they'll have a rent and then we'll have maybe a tax stop and an insurance stop. So when they sign their lease, the insurance for their prorated part of the building was $2,000 and their taxes were maybe $2,000. And if it goes above that, then they're responsible for anything above that as their term goes on. So that's usually how we handle most of our stuff.
Okay.
So we're able to lock in some of our costs.
Yeah. So you're doing more kind of small bay contractor industrial warehouse.
50,000 under buildings is the stuff that we invest in.
And you mentioned like each bay, you said 3,500 square feet. That's so these 50,000, warehouses that you're buying are cut into individual units. Is that what it is?
Yeah. So we bought a building last year. We did a raise, our first raise we did. And we bought a building, it's 50,000 square feet. And the add value for us was it was built out, but it had the ability to be chopped into 8 units. But it just was the physical construction was. A guy originally took it, had a single use for 2 decades, and our add value was doing the build out, renting it out, and then all of a sudden you had that much more per square foot in rent based on the smaller tenants. But yeah, that's kind of what we did, and all those spaces were all 5,000 square feet, so 5 to 6,500.
Nice. So how do you find these? Is this all off market? Is it through brokers?
Yeah, it's tough. Like I said before we got our start in it, just knowing I got a guy, right? We're in Chicago, I got a guy. So we had the guys we're managing for, and you had that, and it just ends up being off market stuff, just building rapport. Now the cool thing in our market is, the big players we all are familiar with, Hiffman and CB Richard Ellis and Cushman Wakefield. A lot of times they don't like messing around with the stuff that's 50,000 square feet under. So when you build a rapport with those guys, they get wind of it, and they might refer it over to you either to maybe do a lease or a sale or something. But if it makes sense, they might be able to quickly represent you and be able to get you the deal because they know you're in that market. So networking, I guess, to answer your question. And bankers, they always have stuff that comes across their plate.
Okay. And how about go a little bit more deeper into your underwriting? So you said 50,000 and under. Do you like to have it near, a highway? Do you like to have it? What is the population around the area? Does it have to be a certain population? Go a little bit deeper into what you're looking for.
Yeah. I'll say one other thing, how we find them. It's probably most important. The last couple buildings we bought were through mailers. We started doing more of an outbound side of things.
Mailers, really?
Yeah.
When I did single family, mailers worked really well, but commercial, I have not had a lot of success with mailers. But that's awesome so it works with industrial, huh?
Yeah. So we did that. I thought that was important because that is different than what I said. But as far as underwriting it goes, I forgot your question. I'm so sorry, Gabe.
No, it's all good. So go a little bit more deeper into your criteria. So you like 50,000 under.
I got you. So here in Chicago, you have 6 counties. Is called the Chicago MSA, and Cook County is where Chicago's at. And everyone hears about Cook County or crime. Like we stay out of Cook County altogether, just because the taxes are unpredictable. We've managed too much stuff in Cook County, where it's like the taxes are $3 a square foot, then all of a sudden goes up to 8, and then you have to spend 2 years trying to get it back down. You get a refund, and then all of a sudden goes back up to 7. Like it's such a.
I had that happen in one of my self-storage facilities in Texas. It was X amount, and literally the next year they doubled it, and I was like, where were you guys coming in your mind that like you could double the property taxes in a single year? It just drives me crazy. Yeah. I tried to fight it. They didn't put it down either. So, yes. I mean, to be fair, it was probably around market where they brought it to, but just doubling taxes in a single year is just a crime, in my opinion.
Yeah, and Cook County is just unpredictable, and their decisions are usually. I mean, you hear Chicago politics and Illinois politics and all that stuff, so it's already you're dodging different things and try to figure out justify things. It's hard sometimes, but so we can stick with the collar counties, which are a little more conservative compared to Chicago, not necessarily the rest of the country, but a little more conservative and at least predictable. So we're big on that, and really we will. As long as it's not in any sort of path of redevelopment, that's really, I mean, we're pretty much open to anything. There is the ability to have outside storage or maybe a larger lot. Truck parking is a big thing here in Chicago, where you could charge $250 to anywhere $250 to $450 for a semi parking spot if you have extra space on your lot, and that's just all the truck traffic. I think it's some crazy like 80% of traffic flows through here, the Chicago market. And they stay there, they stop there, they live here, and they need a place to park their semi.
Wait, 80% of traffic?
Truck traffic, yeah.
80% of truck traffic goes through Chicago?
Traffic, yeah. Some crazy number comes through northern Illinois here.
Wow, that's crazy.
Which is ultimately why we have an economy. And no matter how much horrible stuff you hear about Chicago, that's really the backbone of us here. So. But yeah, so if we can find space that's got outdoor space or expandable, we like that because you can do a dollar cost average if you want to add something at some point.
Yeah. So you guys, outdoor storage. I do storage. I love outdoor storage. I've never rented to a semi though. That is a lot of space. So you're really looking for places. I mean, you're looking for acreage. You're looking for really, really big lots to have that the ability to add in those semis.
Yeah, but even on a small level, even if you're able to pick up, the seller might not have it in their pro forma or the broker doesn't catch it. But if there's a back corner of a lot that you can fit 2-3 lots or 2-3 semis, you're all of a sudden at another $6 to $7, $8 a year and income that falls right to the bottom line.
Yeah, nice. Yeah, that makes sense. All right. So before we move on to the quick question run, I always like to ask, the next 3 to 5 years, what do you guys see on your horizon? What are you guys trying to achieve?
Well, I think here in the Midwest, we're as bad as it is, and it's the headline is there's a tight housing shortage, and the industrial is really expanding fast. So the like I said before, the shortage of these older buildings, the more we get a hold of, the more it's going to be good, and the higher those rents will get pushed up just because of the lack of space. The other thing that's happened in the Chicago market, and it might have happened in the rest of the country, I just can't speak to it. Retail has really died a lot here, and a lot of these retail will go not even to office, but they'll go into industrial space. So you might have like a sign company that used to have a retail front because they had foot traffic. Now, so the amount of people that will go into industrial space, they're paying $22 square foot on the main street, but now they could pay 10 or 11 or even 12 or 13 on some of these industrial spaces, and they don't need the traffic or the visual.
That's interesting.
So
yeah, I never even thought about that, but that does make sense, and I've seen it happen where a business that would traditionally have like a brick and mortar kind of store, now they're just kind of foregoing having 5 retail stores and just centralizing it, putting it into one industrial, maybe with a frontage, something like that, and just kind of running their business out of there versus having all these retail spaces because of the internet. That makes a lot of sense. I've even seen that with like breweries and stuff. Instead of having a retail, on the main street brewery, they just open up an industrial warehouse where they brew their beer, and they also have a bar in the front.
Yeah, exactly. Veterinarians is another. We have a couple of vets in our properties. That's another one that if you start going to your vet, like you go there forever. It's not like you're not getting too much walk-in traffic. And if you got marketing, you really don't need drive-by walk-in traffic.
Yeah. And even my gym, my CrossFit gym is in an industrial warehouse.
Mine is too. Totally. Yep, that's the other big one that the whole fitness industry is really taking a lot of space. So there's so much opportunity in there. The buildings are not as plentiful because you can't go put any of these businesses we just rattled off in a 22-foot clear, 200,000 square foot building. So that doesn't make sense. So definitely demand there. And then on the residential side, it's so tight. It's all around the Midwest here, and especially in these big cities like Chicago, where zoning and building codes just makes it so tough to build anything cheap. The cheapest single family home you can really build around here, any of the builders are building are like $500,000-$600,000, and it's just like, man, and they're not even doing it in volume either. So they do 50, 60 projects that are lots at a time in a project, or open up only sections of a larger development. So those get gobbled up fast, which only creates more demand, which makes them think they could get 10, 15 grand more. They raise prices. So we like this whole kind of Class A single family stuff here in the Chicago market, because even the rental that they built a bunch of apartment complexes here in the Chicago market, but those are all $350 a square foot to make the numbers make sense. And for a studio apartment, it's $2,300. And my Class A single family home, right now is $2,500 to $3,500. So, and that will keep going up, just as these prices keep going up. The cost of construction, all that stuff. So. Super bullish on taking advantage of the demands here on both the commercial and residential side. That's my outlook.
Nice. I love it. All right. Well, with that, it is time to jump into the quick question round. Are you ready?
Yep.
Cool. Starts with education. It could be any form, could be a book you've read, a movie you've seen, a conference you've gone to, a mentorship program you've been a part of. I just need 2 recommendations, one for general life wisdom and then one for real estate. All
right. So I love any of the James Hardy books, Who Not How, and 2X is harder than 10X. Those are the top 2 on top of my mind. But any of his books are awesome. And then around real estate and negotiating, Oren Clef. Have you read Pitch Anything?
I've heard of it. I haven't read it by myself.
You're going to love it, dude. If you're in the space you're in, you'll love it. It's a great audiobook too. It's him rattling off. So it's a good one.
Nice. I'm going to have to pick that up. I've been doing audio. I used to just, when I go on a run, I do podcasts, but I did do a audiobook recently. The guy that does Raising Capital. I had him on the podcast. It's called Raising Capital. Anyways, okay. I read it, did the what's his name? I forget. I listened to it on audiobook, and I listened to that like 1.5 speed, and I love it. You can just kind of like cruise through them. So I'm going to have to
listen to Pitch Anything. I'm telling you, you will not be able to put it down. And just knowing the little I know about you, like you'll love it. Nice.
All right. Next question is for, actually, we're not going to ask this one, but usually we ask if there's any metro in the US you're excited to invest in. What is it? And you're going to say Chicago. So actually we will ask this. You mentioned there are 6 counties in the Chicago area. Of those 6 counties, which one are you most excited about investing in today?
DuPage County. It's a red county in a sea of blue here in Illinois, and it's the most conservative. It's probably I know I've seen it in the top 10 like wealthiest counties in the country and all that. So different lists, but yeah, no, I love DuPage County as far as a pocket here in the Chicago market. And a lot of people don't see that because they get attracted by these other high cap rates in other parts of the city that on paper they look great and sexy, but they don't pan out. But DuPage County is one of those little sleeper areas that a lot of people aren't paying attention to.
So I don't know Chicago. Where is that? If you put out Chicago on a map, is
directly
that
west. So if you're right downtown in the Loop, you go directly west, you'll be in DuPage County. So
nice. I've actually really wanted to go to Chicago for when they turn the river green for St. Patrick's.
It's coming up here next month. Yep. It's too cold though. Still at that point, come in June or July. It's way better.
Yeah, it's like Seattle. Just don't come here during the winter. Come during the summer. You're gonna think it's the best city ever.
Yep.
Right on. All right. Next question is for your younger self. Let's go back to the version of Mark who was just getting started so many years ago. Go back to him, look him in the eye, give him one piece of advice moving forward.
Move faster. And I think I got this from just my own experience, but people we've interviewed hundreds of people on the podcast, our podcast now, where it's like, between the time you say you're going to do something and the time you actually go do it, if you could close that gap a little every single time, you'll just make that much more progress, or mess up that much faster and learn that much faster.
Yeah. That's something I wish for myself. Even today, there is still opportunity to move faster. And it's just, I feel like I can never stop improving in that area because there's always that lag of me like thinking about something and then actually taking the massive action. So I love that as a recommendation, which leads us to the next one. This is about finding deals. It all starts with getting in contact with the seller and penning that purchase agreement. So what is your favorite way to generate leads and find new deals?
Well, I think right now there's this whole industry of wholesaling. I don't know what you guys call it there, but it's basically the bird dog guys that send the flyers out and so forth. But those guys, people feel that's such an easy way to get into real estate, at least here in Chicago. So there's so many of those people out there. So the more of those people that you could make sure that you're the first person they call. And for me, what I do is I say, hey, call me first. And if I don't want it, I'll point you to 3 other people that will get it. And you don't got to do any work. So just trying to be somebody else's guy to help them get going. All these different wholesalers is I think the number one way that we're getting stuff.
That's funny. You are the first person to say you're episode 650 something, and not a single person has said wholesalers up to this point. So that's awesome that you said that. But it's true, because there are a ton, especially in Seattle and in the big markets. There's a ton of wholesalers out there, and these are new guys out there pounding the pavement, putting out the mailers, doing the calls. And they are a great source of good deals. So
and they don't know what to do yet. They don't know what to do yet, and so they'll listen to your guidance. And not to say you could be manipulative, but you can at least help them. And in the meantime, you're in the path of their progress, and you can maybe get a deal.
Nice, I love it. All right, next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, pretty much every time something goes wrong, and that's when we get to learn a lesson. So what was the deal that went a little bit sideways for you, and what was the lesson you pulled from it?
Oh, man, I'll do this high level real fast. When we're buying, we bought 482 C and D class BRRRR properties, and we just started getting lazy. And we're buying them doing the tax sheriff sale. And I remember one day, I saw a property and it went down the one-way street, looked beautiful, did not look back, did not get out, closed, bid on it at the auction the next day, and then went back the next day and realized the side of the house that I didn't look at, the entire roof was gone. and I knew the house was empty for 3-4 years already, because I talked to Alderman about it. And
water, snow,
man!
Yeah.
So we literally had to take that entire place down to the shell. Now, the biggest lesson I learned there is bought the property relatively cheap. I think I spent $32,000. What I should have done is just turned around and sold it for $10,000 or $15,000 and just cut my losses. But what I did is I thought, all right, this is a great opportunity. We're all optimists as entrepreneurs, and we ended up getting the whole thing, building new floors, like everything. We're about break even. Then we got broken into, and ultimately we lost $30,000. So it's like, man, I could have just given a lot away to charity, and not. It was really the opportunity cost, 9 months that it took us to do it. That was the real loss that we had there. So don't get lazy. And usually after every awesome deal, the next one is your worst deal.
Yeah, that's funny. What's that phrase? It's like a dime today or a dollar tomorrow. I can't remember, whatever the phrase is, but yeah, that's a hard decision to make sometimes when you get a property. Do you assign it? Do you wholesale it, or do you go through the effort and put all the do the value add to it? It's always a hard one, especially if you lose money on the back end. That would really burn. But hey, you learned the lesson and you brought it on, and yeah, I'm sure you've taken that lesson and you've applied it to the deals that you're doing today. So
I'm going through that. I'm going through a similar problem right now with Bitcoin. Bitcoin just dropped in the last couple of days, big time. And I'm like, oh, yeah, right, perfect. Do I lower my average cost of what I have into it, or I keep buying more, or is this where you sell? Like, so it's like that double down mentality that entrepreneurs have, man, can either you have to think it averages out somewhere in the end, but that's the dangerous thing we have for all of us.
Dude, I've been burned too many times by crypto, and I no longer even touch it. I'm done. I'm sticking to real estate. I've made a lot of money, but then I lost way more money, and so I'm like, I'm over it. I'm just doing real estate. I know real estate. I know it works. I'm not going to lose money on real estate. All right, next question. We talked about lessons learned. On the other side of that, sometimes things work out, and that is your highlight reel. So what is a deal that stands out in your mind as your favorite?
This is pure luck, right? So we bought an industrial building, and they pretty good deal. If I probably bought it like a 7 cap, rents went up pretty quick. You could have probably sold it pretty quick, made a good dollar. But the golf course that it butted up to got bought by a big developer to do industrial. And the developer, in order to get approval for the plans from the city, they needed to have egress into the complex in multiple different ways. One on the other side, and they needed one on this side. So we were right at the corner of a street where they basically bought our building, and they bought it to purely put a new street in to go into their new development. And the price we got was about 3 times of what we paid. And it's one of the biggest paydays we ever had in that sense. And we 1031 that into another property that the rents have just doubled on that one as well too. So again, just luck, right? I had a vacant building. One other story, I had a vacant building one time, closed on it. We bought a portfolio of like 10 properties, all crappy C&D class stuff. 4 flat, got a call from the board up people saying your house burned down yesterday. Like you need, like they try to get them to repair the house, so you file insurance claims and all that stuff. And the lender that we bought it from made us get a full insurance thing. and this property we paid for 30 grand for, I got $330,000 for. So it's like you just can't get any more lucky than that. No one got hurt, of course. I'll throw that out there, but just sometimes those moments help me for the gut punches we all take, or the punch in the face we take, or the difficult conversations. Like, all right, well, I got lucky over here, so this is kind of average it out and makes it all worth it.
Yeah. I mean, you're going to get punched in the face, but when luck comes your way, you take it. Don't say no to luck. It's part of the game. And when it comes around, you gotta hug it with all your might. All right. That brings us to the second to last question. I've been adding this recently. AI is here and it's here to stay. And I'm a big proponent of adding it into my business in as many ways as I responsibly can. So how do you use AI in your business?
My wife and my kids, they think I'm out of control, but I just tell them I'm only about 30 days ahead of them. But I mean, the way I use it in the sense of just kind of for everything now in this, whether it be from the marketing side of things to summarizing videos to the attorney sent over something yesterday. It's like, those are very basic 101 things. But for the property management side of things, it's really cool how we have it set up with the decision tree around automatically approving work orders, are taking what the techs are doing in the field and automatically generating the invoices to get paid and all that stuff. So there's a lot of these little like connector pieces that used to be manual before that we're able to tie together. Just messing around with Claude code and all that stuff in the last couple of weeks, just looking at I have no coding background, but the ability to see what I could do. And if I
Claude is
So
for on that topic, I like to use Lovable to build out like mini apps, mini websites, anything like that. Do you like Claude better?
Yeah, definitely. And with Claude Code now, I imagine if you haven't messed around with it, Lovable, you won't probably need it as much in that sense. But yeah, no, I'm a big fan of Claude at this point. It just ends up being, I use it to find me stuff all the time. I used it. I have a podcast I'm going to do right after this. And it's like, hey, I'm interviewing this guy today. Tell me everything you can about it. And as I'm driving, it just reads everything off for me. So it's just these little things that just kind of help me be sharper in that sense. So.
Yeah. And it's only the beginning, which is the crazy part. In 5 years, who knows what's going to happen. So I'm excited. All right, that does lead us to the very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Yeah, you can definitely find me, Mark Ainley on LinkedIn. You can find me at Mark Ainley, REI on Instagram. You can Google me. My cell phone's everywhere. You check out our podcast if you're here in Chicago, straightupchicagoinvestor.com. I think we're rolling out episode 440 this week. So pretty excited about that.
Nice. Congrats. All right. That wraps it up. Mark, thanks for hopping on the show.
Man, I appreciate you having me out here. This is great.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review, comment, anything like that. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.